Hello and welcome to Pro Trader Strategies Market Commentary. Yes, it is a casual Monday, March the 4th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we are here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, now that we've had that out of the way, let's get it on with some economic data. It's a Monday, not usually getting a whole lot of economic data, which is the case today. Other than in the United States here, we got construction spending month over month came in at negative 0.6%, expected to be a positive 0.2%, no revision to last month's number, but we don't want to see these construction numbers start to wane. One thing to get out of the way, sorry about the casual Monday, we are having water issues and or septic issues at my house. So first time living on a septic tank and it's got a problem. So we can't use the water right now. Sorry about that, but that's what we might have to go with for a couple of days. All right, let's talk about the overall markets. We've got crude oil, in positive territory right now. This is in and about, maybe slightly higher at this point because of that drawdown we saw last week. Remember, for a while there, I've been under the camp that we should be in the lower to mid 50s. With this big drawdown, it's probably mid to 60s now for me, in and around where I would think value is. So we are kind of right there as we're going, moving along today. Pretty big moves today happening though across the board. We've got, as you can see here, gold futures coming off quite a bit. Again, we've talked about this before, and the levers and pulleys started coming through on Friday. Remember, I was like, when we're seeing all of this pulling out of gold and out of the bonds, we should see those equities get a little bit of boost. Well, as of Friday, by the time we did the market commentary, we didn't see that move, but late in the day, we did get that push. This morning, we started getting a push in the equities, but we'll see that we really precipitously started selling off quite quickly. So a lot of people on Twitter are freaking out. Yes. So bonds moving higher as these equities are starting to lose steam. That's a lever and pulley people are going to be throwing money at. You can see the VIX spike here. That's a real good indication. We're seeing some weakness in the equities, but you can see here with the Dow Jones Industrial Average, a big, huge move to the downside. We were in positive territory this morning, but now basically engulfing the entire last couple of weeks moves. We even talked about this the last couple of weeks. We are making big moves, but we aren't going anywhere. Well, now we're finally starting to see something make this push. And I really believe it has to do with, the economic data is not coming out as great as we would expect it. We've got this massive parabolic move. I mean, if you look at this, it is more than a 45-degree angle upwards, and have extended over from the value area low to extending way over the value area high without much pause in between. It's been a snap whipsaw. I would expect this to start rolling back. Again, I'm expecting us to go back to the point of control and start settling down. Nothing new here, I guess. NASDAQ, similar situation. Didn't go as extended to the upside and outside of that value area like we saw with the Dow Jones, but still got a massive 45-degree straight up move from 52-week lows to these Fibonacci extension and retracement areas. Again, now that we're kind of pushed off, blew off the steam, went up there and actually kissed it, we could easily start seeing this follow with the mindset that I was expecting us to go back down to the point of control. Again, similar situation, tested the extremes with the equities and now have just lost it and are falling out of bed. You can see overnight inventory really got long, gapped out to the upside. And then now in the last basically 45 minutes after the open, since 11 o'clock Eastern, we have just seen nothing but negative moves to the downside. That part of it might be Judiciary Committee coming after Trump and all kinds of other media news things coming out. But A lot of this, I think, is technical, and we've just overextended to the upside. All right, let's get over to some trades that I'm looking at. XLU is a trade that I'm adding to my portfolio today, and this was well before the big sell-off. I was looking at XLU being the utilities, one of the more safe havens, and when the market was really starting to push higher, I was like, okay, we might be seeing a little bit of sector rotation here. Still on the mindset that we saw that weakness in the gold, and this was before all of these moves happened this morning. So I was expecting maybe a sector rotation out of utilities and into something more risky like tech, which is why I put this on originally. Some of those theories are out now, with tech kind of showing some weakness, E-mini, NASDAQ, Dow all across the board showing some weakness. But it should help me out with this trade still nonetheless. And I went into the May and bought the 56 puts in there for 92 cents. So obviously looking for a retracement on that. With those 56 puts, you can see that I am still right there at the value area high. So if the market just rolls over and at least comes down to test that value area high, I'm going to do very well in this trade. That's what I'm looking for. Not much more of a big move. I'm not necessarily playing this to come all the way down to the point of control. That would be nice, obviously. But at this point, I believe it's at least going to come down and test the value area high here for this trade. And then on to gold. This is a trade that I covered. You know, we started seeing this weakness last week with the equities moving higher, talking about the sector rotation, all of those things being equal. We saw gold actually start to sell off quicker or earlier than we saw with GDXJ. And that's a very typical type of move. We see the laggers come after the leader, and the lagger in this case would be those gold miners. All right. So when we saw gold coming off, that's when I put on this trade. And remember, I went into the April, I sold the 35 calls in there for 43 cents, and I was able to buy those back for 17 cents this morning. I was actually trying to get out of those on Friday for about a quarter, and we were seeing volatility actually increase on Friday, and that wasn't allowing me to get out very easily. Today, another big move. Volatility didn't come out or even help me. It actually started upticking just a bit, but the big move helped me out enough to be able to get out of this well better than 50% of my max profit. So I was able to get out, like I said, for 17 cents. And that's it. That's all I've done today, other than call a bunch of repairmen to come over to the house and try and figure out what my problem is. And hopefully I'll be back up and running tomorrow at least. And then Thursday, we got a great webinar for you guys. It is on the broken wing put butterfly. It is a great strategy that we can create a bit of a defined risk strategy with no risk to the upside. So I'll show you how to build that strategy out, the right strike location, everything, things that you will not be able to find online in order to build this strategy out appropriately and increase your probabilities of success, which is exactly what I do in all my webinars, trying to make these things so that you go through a very defined process of steps in order to discern whether or not this strategy is appropriate for everything going on in and around the underlying you're looking at. So check it out. And if it doesn't work out for those rules for that specific strategy, there's other strategies we talk about that you can implement for your directional assumption around what is appropriate for that underlying. Talk about all of that in Thursday's webinar. So check that out. And if you can't take that, take it easy.